Hey, it's Andreas, and let's talk about Chipotle stock. Now, for my European audience here, Chipotle is planning to open more restaurants in the UK and France and Spain, so we might see some Chipotle restaurants popping up around here, and you might be curious about the company to see if is it a good investment or not? Well, let's take a look at revenue, shares outstanding, historical price to earnings ratio, as well as my final conclusion in this video. Starting off by introducing the company, it's a Mexican food restaurants and they serve it freshly, so it's your burritos and stuff like that. And currently, the market cap is 42.7 billion with revenues of 7.5 billion. And that means that the company is trading at 5.66 times revenue. That's just a figure to keep in mind and guide you in your decision. Speaking of revenue, we can see that revenue growth has been uneven and very bumpy. But if we take a look at the most recent years here, we can see that from 2019 here to 2020, revenue grew by 7%, but then from 2020 to 2021, revenue grew by a whopping 26%. And for some people, this could potentially warrant them be willing to pay a higher price for the value that you get, and then price to earnings goes up. Speaking about shares outstanding, they've been consistently buying back shares, and you can see on the graph that in millions of shares outstanding, it's been slowly declining. And this is something that institutions absolutely love. We can see price to earnings here is very high. I don't think that these numbers are great at all. These are not bargain or sale prices. These are expensive prices. But maybe institutions and investors believe that this European growth will pay off. Then again, they've been having a high price to earnings ratio for quite some time now. And I dug some more into the company and found out that this is the institution favorite. Its float here is held to 96.5 by institutions, and basically what this means is that as long as the big boys just time on hand this stock, well, then prices won't go down. And we've seen the company hold up very well here and not dropping off much at all in this recession. The price is very expensive. We can see that insiders have basically no stake in this company. And I took a look at insider activity and I see that all the buy transactions are mostly grants, so a part of the compensation to the C-suite, they get stocks for free basically, for the work that they do, and then they just immediately sell it into the market. Lots and lots of sale transactions. So understandably, insiders seem to believe that this stock is priced too high. Institutions are diamond handing it, so price is not dropping here in the short term. In my opinion, this is a expensive company, and I think that as a retail investor, you can find better returns on other ventures. But hey, that's just my opinion. If you want to invest, go ahead. As always, I hope you make a ton of money, whatever investments you decide to make. Take care now. Bye bye.